Hello, everybody. There has been a hiatus of a few weeks for various reasons, but we are now back with the Oxford Economics occasional series of podcasts. My name is Gabriel Stein. I'm Director Asset Management Services at Oxford Economics, and I'm sitting with Sarah Fowler, one of our economists, and we're going to talk about Thailand and the problems that the mooted, hoped for, but uncertain return to democracy entail for the Thai economy. Sarah, first of all, we're talking about a return to democracy. Thailand is, of course, ruled by a military government which took power about a year ago. What are the steps involved in moving back to having democratic elections?
So the first step, the draft constitution review has been released. First step would be royal approval of this by September, then more general approval shared with the public by November, and then a referendum across the whole population in January. Obviously, each stage of this is very conditional on each stage being agreed, which we're not sure about. And if the schedule does proceed, they would hold democratic elections in August or September next year.
So it's quite a long period, and it depends, as you say, on various approvals. One of the approvals I note is the royal approval, and we know that the king is very ill, and I believe he's still in hospital now, has been for some months. Is there a danger that he may actually pass away and everything is thrown by a succession issue in Thailand? Because there's also some question marks over the king's designated successor.
That's right, yes. The Crown Prince would be the successor in line. He's much less popular than his father within Thailand. He's thought to be quite closely aligned to Thaksin, who was Prime Minister 2001 to 2006 and still has a lot of supporters in Thailand. He does have a sister who is believed to be more popular in Thailand, but is on the other side believed to have supported the military coup almost a year ago. So whatever happened with the royal succession, there would be the likelihood that financial markets would be quite heavily disrupted. It would take quite a lot of time to resolve.
Okay, but let's assume that this goes through, whether the Crown Prince or his sister succeeds. In fact, let's hope, I suppose, that the king will survive. You're still not particularly enthusiastic about Thai prospects.
No. A big factor of the growth over the last decade is the expansion of the tourism industry. That's gone from less than 3 or 4% of GDP 10 years ago to 10% of GDP now. That's not going to continue to grow at the pace it has. More of the prime sites are now occupied, so there's less capacity expansion. There's also Indonesia, Vietnam competitors who have more potential to expand their tourism industry. So that's going to be less of a big contributor to growth going forward. The other factor is that the political turmoil over the last 10 years and the succession of protests and cycle we've got into has actually harmed the improving ease of doing business, and in terms of the global competitiveness surveys, Thailand has actually deteriorated its performance in these kind of things. So that's another factor that we think in long term will hold back investors from investing in Thailand.
So Thailand is losing, as it were, structural competitiveness. I seem to recall also that the Thai baht is actually quite strong, which presumably is a further problem for them, particularly relative to currencies like the Indonesian rupiah and the Vietnamese dong.
That's right, yes, that has been on top of China is a big export market for them. So on top of the slower China demand, the currency has been an additional headwind for exporters to cope with.
And presumably also for the tourism sector.
That's right, yes. Although tourism has rebounded very strongly, it's been the one thing, the recovery of the private sector, when the coup happened just over a year ago, everyone expected a strong recovery in the economy, and that hasn't actually happened. The private sector growth has been incredibly modest over the last year, but the tourism sector is the one area that has grown very strongly.
What's holding back the private sector? Is this a China-related issue?
It's partly China dampening the demand for the whole region, and the exporters' demand is so weak. It's also that although budget spending has rebounded, there are still a lot of public projects on hold as the military government reviews some of the decisions made by the previous government, who the Prime Minister was Thaksin's sister, Yingluck. A lot of the projects they'd initiated, like water management in case Thailand had a bad flood again, these kind of big infrastructure projects, they're on hold, just awaiting further clarification of the political situation.
Okay, so politics obviously playing a substantial role, and China, that's not surprising. Readers of our material know that we consider the weakness in China right now to be one of the biggest dangers, in fact, to the world economy in 2015 and 2016. But what about other domestic fundamentals in Thailand? Public finances, the foreign account, and so on.
So Thailand is a big oil importer, so the current account has been boosted a lot, positioned by the falling oil price since last year. So the strong current account surplus and the fiscal position is reasonable, partly because a lot of the time over the last 10 years they just haven't been able to spend as much as they might have planned due to political change. So these factors have actually meant the baht has actually outperformed other currencies in Malaysia, India, Indonesia, and the stock market has actually performed pretty well the last few years. But given the headwinds of the political change and the impact this will have dampening the longer growth prospects, we just don't see the market strength continuing in Thailand.
On the other hand, presumably a weaker baht should should counteract any weakness in tourism, since it will make Thailand a cheaper vacation target.
It will, but the sheer contribution we've seen from tourism over the last 10 years, the growth rate we've seen of tourism, we do expect that to slow, which I think will be a bigger factor.
So it'll be a bit of a mitigation, but it cannot be a game changer. That's pretty clear from what you're saying. So what do you expect moving forward? Therefore, it sounds like a weaker currency, deteriorating finances, substantial uncertainty, and bad news for markets, and meanwhile, fundamentals on competitiveness deteriorating as well.
So yes, our long-term growth forecast for Thailand is for Thailand to grow at about 3% over the longer term, which is substantially less than others in the region. In Malaysia we have over 3%, Vietnam, Indonesia we have about 5% long-term growth. So we do expect, and the other thing is those markets are gradually opening up their FDI markets more. So while Thailand is a big producer in the motor vehicle industry, and it produces almost half of the world's supply of hard drives for personal computers, just over the longer term we expect Thailand to become a less popular destination for FDI, and some of its competitors within the region to take some of that market share.
That's a pretty gloomy outlook. Is there anything that could change this? Can the Thais reinvent themselves, or will their economy in any further way shift into new directions, new markets? Anything that sort of springs to mind as this is what they should do, or could do, or may do?
I think the real key to it is if the political sides could agree. If Thaksin's supporters, which are mostly clustered in the north and northeast, and the establishment mostly clustered in the centre and the south. If there's any way of resolving that and ending the cycle of constant political change, that would be the absolute key to improving the foreign direct investment outlook. But we just don't see how at the moment that can happen.
So it boils down to politics, and the politics don't look particularly promising. That's not a very optimistic note to end on, but that is the note we will end on. Sarah Fowler, thank you very, very much. And we will be back with future podcasts on this and on other topics.